Hello. All right. We get a lot of questions from founders about how you actually file taxes and what type of taxes are required. So, in the sake of trying to make this easier to understand, I brought in Luke here to chat about what does it actually take? Like, what do I actually have to do as a founder to file taxes? Because Luke, you're a CPA and you happen to be one of those like tax expert CEAs. What's up, Luke?
Yeah, I'm excited to talk about this because it is an area that we get a ton of questions and it is really confusing because there are so many different things that people actually fall under the umbrella of filing taxes. And so I'm happy to dive in here and just clarify some of these.
Cool. Well, so let's pretend like I'm a first-time founder. This is my first time in a role where I'm actually responsible for the stuff like taxes. So what do I need to know?
Yeah, I would say the number one thing is you have a requirement from the government. You formed an entity, which is a state entity, usually a Delaware C Corp, and there are certain requirements. One of them is that you have to file income taxes. You may also have to file sales tax if you're selling something like software that may be taxable in some states. You may also, well, you do have a franchise tax filing in Delaware as well. And you may also have one wherever you're doing business. So all of that. And then you also have registrations in certain states. So when people say file taxes, we often think about income taxes with the IRS, but there's actually a whole lot more that goes into them all.
Got it. And all of these things, are they all like due at the same time? Are they do like when do I have to start getting really nervous or pay attention?
Good question. The state agencies do not usually coordinate with the IRS except on income tax. Those are generally the same. But as far as other due dates that you need to keep track of, these you, as a responsible business owner, you should burn into your brain. You should never forget these. You should be able to recite these better than your vows. So 1099s are due January 31st. There are some other exceptions, but it's not worth going into. Just file them by January 31st. March 1st is when your Delaware franchise tax is due, and then your income taxes are due April 15th.
Can you just give me like a one-line summary of a 1099? That might not be a term everybody knows what it is.
A 1099 is essentially, instead of sending an employee a W-2, you send a contractor a 1099. It says, hey, IRS, I paid this contractor over $600, and the contractor now is obligated to report that because IRS will be expecting that income to be reported.
With certain vendors or contractors that you pay a certain amount over the time, you have to file a form called a 1099 to let the IRS know that you paid them. Got it. And what happens if it's April 15th? Let's say it's April 14th, and I forgot, I didn't watch this like little video, and I'm like, I'm not going to have my stuff in order by then.
Yeah, the IRS and state income tax agencies are actually somewhat lenient on this, meaning they give you an opportunity to extend. So you actually get an extra 6 months if you file the extension on the original due date. And if it's a holiday or weekend, it goes to the next business day. But either way, you can extend your income tax return with the state and the IRS, your federal return, 6 months. And even if you plan to file on time or file sometime in the summer, for example, I always recommend that you file an extension because it gives you the opportunity later on, before October 15th, to actually file what's called a superseded return if you found a mistake. So it gives you more options. It doesn't cost anything. There is no risk to filing an extension. It's a very common business practice. Many people do it every year.
Got it. Cool.
Okay, so we talked a little bit about the different kinds of taxes. So the income taxes is based on like sales and expenses. And we talked about sales tax, which is based on either software or a tangible good that you sell. The franchise taxes are actually based on like the pleasure of doing business. For example, California has an $800 tax that most companies are subject to just for the pleasure of doing business in California, regardless. Yeah. And other states and jurisdictions have similar types of rules. The most complicated really would be sales tax, especially if you're in a state like Washington, which has a business and occupancy tax with their sales tax. Those are all very different deadlines. You should work with somebody on them. But regardless, the raw materials that you need for pretty much any of these filings are the financials. So,
So just to be clear, these are like financials are a profit and loss statement, sometimes called an income statement, and a balance sheet. Your payroll reports would come from your payroll provider, assuming you already have a payroll set up and there's specific tax reports in your payroll system. Your financials you would get from your accounting system, and your sales by state is the amount of money that you are selling to customers by state, which might come from one or many of your billing providers like Stripe, for example.
Exactly. And if you're working with a company like Puzzle, we make it really easy for you to just download the financials that you need directly from Puzzle with one download, as opposed to hunting and pecking for them all. Or you could add your tax accountant in there and they could actually grab it themselves as well.
Cool.
Okay, so should you file your taxes on your own? My answer is unequivocally, no, do not file your taxes on your own. There is a lot of leeway, I think, in bookkeeping because there are certain controls in place, especially with a good monthly checklist on everything you need to do each month to make sure your books are closed. But if you file your taxes on your own, you could really be missing out on significant R&D tax credits. I also worked at a company that was an accounting organization, and they forgot or didn't know that they were supposed to report some non-US shareholders or subsidiaries. Then they got a letter in the mail 3 years later from the IRS saying you owe like $10,000 or $25,000. What is often conflated, people think if I click the file button on TurboTax that you did your taxes right. The IRS takes their sweet time to find any mistakes, and then they'll come for you 3 or 7 years from now. And you may not remember, midnight on April 15th, what you chose to deduct and maybe what you shouldn't have.
Right, meaning mistakes that you sort of skip over or you don't know can come back to haunt you along the way. And there's experts who know all of this stuff pretty easily.
Exactly. I like to say financial accounting.
Did you just say $25,000 penalty? That's insane.
Yeah, and that's purely just an information return. So you just have to declare, it's part of like an anti-money laundering initiative. You have to declare non-US bank accounts. You have to declare any subsidiary outside of the US or shareholders over a certain percentage as well.
And were we talking before on another one of these calls that filing your payroll incorrectly or just paying yourself directly from like your company bank account has sort of guaranteed penalties?
Yeah, if you're paying yourself what the IRS deems as wages, meaning they can review the facts and circumstances and say, oh, that $10,000 payment to Sasha around Christmas, that's actually wages. That should have had income tax and payroll taxes withheld on it. And if the company didn't do that, you could actually be personally liable for criminal sanctions, and meaning you could go to jail if it was actually intentional. So that's one reason I always recommend at least having a tax accountant, because they're going to catch some of these things that you may have made an innocent, honest mistake. You just didn't study accounting like I did. And that's why you should really engage somebody to manage this for you.
And a tax accountant specifically, you said the word tax accountant, that's different than maybe the bookkeeper that gives you your monthly financials?
Yeah, the bookkeeper who does your monthly financials may offer to do some admin type tax work. Think of that as like maybe the sales tax. That's pretty common for a bookkeeper to do. But it's a very different skill to file income taxes than to prepare your financial statements. Like in one of these bigger firms, there are actually completely different departments. And you can think of them as being like a brain surgeon and a heart surgeon. You don't want a brain surgeon working on your heart or vice versa.
So this would probably cost extra.
Yeah, having your taxes filed is something that, just the cost of doing business. I generally would see, $1,500 maybe on the low end. If you have really low activity and a good relationship with a tax provider, maybe it could be a bit less. But the other thing that happens more and more in this remote work world is if you have employees in multiple states, you actually have to file an income tax return in those states most of the time. Now, that may seem like an unnecessary detail, but what that means is if you had employees in all 50 states, your tax return could be 2,000 pages long. And the tax accountant is going to charge you by the hour to review and make sure everything matches and ties out. And in that case, you may actually owe your tax accountant $30,000 to $50,000 just for filing a return, not for any actual tax.
Got it. So let's say all of your employees are in one state and you're not generating any revenue because you're a brand new startup. That would probably be something on the lower end, around 1,500. But if you have a remote team and you have employees in multiple states and you're generating revenue and you're a software company, let's say, in multiple states, you have to file all of these state things as well. And that is what can add up the cost of something that seems simple potentially as a tax return, but actually it's a lot of different returns. And one of the glory parts of the United States is every state's different. And they have their own rules and got it. Okay.
Exactly.
What if I don't know, like, where do I find like an accounting partner?
This, I will empathize here. It is a bit challenging to find a good accounting partner, but that's why we went to the work of actually vetting a bunch of them for you. So if you go to puzzle.io/accountant-listing, we actually have all of our partners listed there, and there are more coming every day in order to really make sure that you are matched with somebody who knows your business, understands the types of filings you need, and can work with you based on your business model. So you can always reach out.
Not exhaustive, but these are like people that know and work with startups. And so they're familiar with startup business models and they're familiar with the complexities of, if you're a local bookkeeper only working with people locally in your county, selling in a local bakery, that would be a different skill set than somebody that's familiar with multiple state filings for SaaS and distributed teams, or maybe even international foreign related stuff.
Yeah. The other thing you probably want to check is a referral. So if there's somebody who's worked with that accountant for a few years who has a similar type of business as you, it's difficult because when you're not a professional in that industry, you really do need to rely on another professional to give you advice, as opposed to just picking the cheapest one. I highly discourage you from buying cheap tires or cheap tax returns.
Got it. So you can, so just to sort of break this down to how I actually need to do it as a founder. I need to have my monthly financials. There's like three different things I need to have. I have like my monthly financials. I need to know like my states and where I'm selling. I guess for 1099s, you also need to know your contractor, your vendors, your sort of W-2 employees. I need to have my financials. I need to have either a bookkeeper or I need to do it myself, DIY, if I'm kind of putting together. We highly recommend having a dedicated tax accountant that knows and understands what to do. We've talked about there's penalties before. If you don't do it, you might either lose money by not filing R&D tax credits. You might accidentally do something like just pull some money out to pay yourself unnecessarily, and that could be triggered a penalty for and personal and criminal liability. You could just make mistakes by categorizing things the wrong way that have different tax treatments. So you're effectively potentially leaving money on the table, having penalties for non-compliance, increasing it. And that's not meant to scare you, other than, you know, if you think about $1,500 to $10,000 as peace of mind for doing something that's required the moment you incorporated, you know, relatively, it sounds like a good deal.
Absolutely. Yeah. Just one of those letters from the IRS not only will cause you a lot of sleepless nights, but, you know, potentially $10,000 or $25,000. It's just worth it to have a professional do your taxes.
Cool. All right. Well, thanks, Luke. Appreciate it.
Thank you.